In this video, we delve into the advanced trading concept of dual space, where a stock's price diverges significantly from its 20-period and 200-period moving averages, creating two distinct spaces. We introduce the three-finger spread as a visual tool to gauge this separation and discuss its importance in predicting powerful market movements. Alongside, we'll touch on related strategies, such as understanding market cycles and transitions from wide to narrow states, and the impact of these dynamics on trading decisions. This guide aims to equip traders with the insights needed to navigate market complexities more effectively, enhancing both their analytical skills and trading performance.
Dual space, that concept is when you have your stock gets height away from the 20 at a time where your 20 is separated a decent distance from the 200. So you got three items. You have the price, you have the 20, and you have the 200 all separated apart. Okay? To create space 1, that's why we call it dual space, and space 2. Doesn't matter which space you number. This could be 1 and 2. It doesn't matter. As long as you understand there are two layers. Now, these layers are not always equal. In the real world, we can't have perfection where sometimes they're equal, where space 1 is equal to space 2, but not always. A lot of times in the real world, you get the dual space, but the spaces aren't equal, but they're still relatively separate apart. That's right, Kat. We call it I call it sometimes the three-finger spread. So you've got one finger here, another finger there, and another finger there. There's your three-finger spread. Dual space. So when you get violent, listen to me carefully, when you get a stock or an item that has the three-finger spread, that has the dual space, all three items are apart from each other. Anything that occurs violent or powerful from that three-finger spread, anything powerful that occurs from that dual wide space is very meaningful. So from this dual wide space, look at what you have. So we've got wideness. So we got the three-finger spread there, right? Now, boom, anything strong that kicks off a move against the three-finger spread is very meaningful. This igniting power from the three-finger spread will tend to kick off something very, very enduring. All right? Very enduring. Now, let's take the three-finger spread in the opposite direction. All right? Here. Here. All right, it's not as wide as the other one, but it's still there. It's all relative. They're separated apart from each other. All right? They're separated apart. Now, from so now this way, this igniting bar out of the same way this igniting bar down, this igniting bar up. when it originates from the three-finger spread, the opposite way, it's meaningful. Okay? Does it need to clear 5? No, it doesn't. But if it does, that's now stacking your concepts, right, Ahmed? So the more concepts that are stacked at the same time in one event, the more powerful it is. You see? So wide state, that's all a three-finger spread is, wide state, igniting elephant bar, ignite elephant bar plus clearing. So this takes out 5 bars, 1, 2, 3, 4, 5. So clearing, so we've got an elephant bar plus, this is a bear elephant bar plus clearing, not from a 200. So remember, it's not from, this one's not from the 200. Instead of the 200, your location item is dual space. Wow. Bear elephant bar plus clearing dual space 2S. Wow. It's another powerful combination. Okay? Here you have plus elephant, bull elephant bar plus clearing from dual space. Tell me you understand the formula that we have here. There's multiple things developing or stacked together at the same time. All right? Okay? What position would that be on what position? Well, dual space is always your plus 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 or negative 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 position, right? Is you're far away. All right. Now, what's another concept that I've taught you? I've taught you wide to narrow, right? I've taught you that markets go from narrow state to wide, back to narrow. Sometimes they do it this way. Narrow state, wide, back to narrow, right? So sometimes, so these are your narrow states. Narrow state, narrow state, wide state, wide state, narrow state. Okay? So sometimes you're going to move up from a wide state. Boom, that's here. Sometimes you're going to move up from a narrow state to a wide state. Sometimes you're going to move down from a narrow state to a wide state. But all markets do is vacillate between these two states. So in reality, you have 3 states, right? So the 3 states are narrow state is 1, wide state is, well, let's do it in order. The neutral state, the trending state is 2, the wide state is 3. Okay? And so your narrow state is 1, your trending state is 2, that's the in-between state, and the wide state is 3. Okay? So you're playing 20 MA plays here, pullback plays, 20 MA plays, color change plays, RBIs, GBI plays. Here you're playing clearing plays, igniting plays. So there are igniting plays out of narrow states. There are trending plays off 20s, mild pullbacks that stay in the top or bottom 20%. And then wide state plays, you're fading and going the other way with clearing events again. So clearing events here can be played this way. Clearing events here can be played that way. Clearing event. Clearing event. Wide state. Wide state. Narrow state. Does this make sense? Wide to narrow, back to wide, back to narrow. Does this make sense? Yes? Okay. Now, Ricky is asking, is it too late to buy? This is what Ricky is asking. Let's help Ricky out. This is a bull elephant bar plus clearing off the 200, and Ricky's asking, is it too late to buy this? What? That is the buy. What are you talking about? That is the buy. How can you ask if that's too late? That is the buy. The most powerful buy we have. There is nothing more powerful than this. Nothing. All right? So, now, so the narrow to wide state you have. Now, let's look at this on a longer term view. Let's do the narrow. Do you see it? Narrow. It's all relative. Narrow to wide. Wide. Back to narrow. I hope you see that. I've also explained this, that the market has 4 cycles, 4 parts to its cycle, and then repeat. So you've got the narrow state here, back to narrow, and the wide state here, right? And so these 4 stages just repeat over and over again. Now, what I've also told you is that this is not always one-to-one, is not always flat like that. So you will often get this like this. So 1-to-1 is slanted. You guys remember these things? 1-to-1 is slanted. This 1-to-1 is flat. In the downward trend, you get 1-to-1 slanted this way. 1, 2, 3, 4, 1. Yes? Okay? So if we look at this Bitcoin chart, longer term chart here, you've got 1, to 1, 1, 2, 3, 4, 1 again, and 2 should be next, right? Do you see how clear these things come together? Like so many different concepts come together, no? Do you see it? Is it clear to you? Have you been doing your work that these things are clear? Let me know. One to one. All right. Should you be buying Bitcoin? Of course. That's what the whole purpose of our teaching you these concepts are for, to know when it's a buy. All right. What else have I taught you? Have I taught you market law 4? Have we gone over this? Market law 4 states that after a series, it's market law 4. This drop is strong. The first drop the first drop that is more severe than these drops. So see this drop? Milder, milder, milder. Then you get one more severe. All right? Then this next rally is likely to fail. Now it can fail in 3 spots. It can fail right under. Let me show you this. It can fail right under. Let's do that even more pronounced. It can fail right under. That's your left head. That's your head and shoulders version, right? So if it fails under, it becomes a head and shoulders. I hope you see that. But it can also fail at or near the high, and that becomes your double top high, double top high. Or it can give you the peekaboo, which I call the trap. The peekaboo new high and fail. Okay? And that's your new high bull trap. So the bulls get trapped buying the new high and then the failure. Now, the version that tends to create the biggest declines is the third one. This is the one that creates statistically the biggest declines. This one, because more people pile in, and that means more people have to eventually pile out, driving the stock significantly lower. So the stock gets top heavy here. And so whenever something is top heavy, to unwind it takes it. More people have to exit. If more people are in it, then more people have to exit. More exiting is more selling. More selling is deeper decline. Okay? Now we have that here. See the pullbacks? You see how mild they are? And then boom, here's your first major one. Here's the move back up. And boom, market law 4. A lot of times it's easier to see this thing in hindsight, but you should still know it. Tell me you understand market law 4. You got it? All these things we have had individual sessions on, individual puzzle pieces. You understand this? Market law 4? Individual puzzle pieces that come together to tell a full story.